Hey, it's Mack with PriceActionTradingSystem.com, and it's Thursday. It's April 24th. This will be our chart lesson for today, and a couple of housekeeping things before we get to the chart lesson. I had a really good move down today. This was off of the um, jobs report, and that's one of the you know, high priority ones. And you can see it definitely doesn't always move the market like this, but it seemed to have today for whatever reason. But it is a high priority. So we did have that news item that moved this. But going back to the news item, I have been testing the news indicators you can add to NT that I put on the web, and it is on the website. So if you're a member, you can download it. It's free. As long as you have a membership to get into the membership site, it's there for free download. And after a week or two, I may just go ahead and fix it where anybody can set it up where anybody can download. I didn't write the program. I just downloaded it from NinjaTrader. But I did notice something that I didn't notice. You can see right here, I got evidently there's some advertising in it. Not a big deal, but I did get some advertising today. So I'm not advertising this guy. I don't know who Atlas Lines are or anything. Uh, it's at daytradetowin.com. I don't know anything about them, but evidently it's their indicator, and they're using it to add some advertising as well. So I don't see it as an issue, to be honest. But it's there. I don't know how it clears off, or if it clears if you put something new every day. But I just noticed this pop up here today, and it wasn't there yesterday when I was using it. So, but anyway, that is there. I also added another option on the website today. Anytime I put a new post or a new lesson there, you should automatically get an email now if you have your proper email and your user listed under your account and under your user information. So if you don't have, if you want to get that update, go in there and update your email. Uh, if, and you if you didn't get it, if you are in there and you didn't get an email today, you might check your spam just to make sure it's not sending it to your spam box. Some software will automatically do that, and once you show that it's not spam, you can set it up where you should get it each time. And we're continually trying to improve the user experience, and I've had a couple of requests on that, and it's been difficult to send large emails like that because of the spam issues, and you get labeled as spam. But the way we're doing it now, I think we will be better. I think it's going to work, especially since it's coming directly from our website now, and it will. And like I said, if it does go in your spam box, if you list it as not spam, it shouldn't go in there in the future. So if you haven't gotten an email from us today and you are a registered user, I would just go in there and double check that your email address is correct, and correct that. If you don't want to get it, just send it to spam, and it'll automatically go in your spam box, or either go into your user account and uh, you know change your email address or whatever, and that way you won't get anything from us. So but anyway, let's get started on the chart lesson for today. Oh, actually, I was going to save this for the end, but I'll do it in the beginning. You can see my chart here, how it looks, and people will tell you that that this is all subjective, and anybody can, you can find lines all over here, which you can find lines all over your chart, but we're teaching you to do it a specific way. And it's amazing. Lately I get emails from people and they send me their chart, and it's amazingly scary how close their chart looks to mine. And I got this chart today, and you can see it looks almost exactly like mine. They found the little spiking channel here, and then they found the channel working down. They got the break, the new low. They found this bigger channel on the way up. They found the small channels working within. Uh, Really good job here. So that's somebody that's paid attention to what we do, and they've learned to draw their charts almost exactly like mine. Is it 100% like mine? No, but it's about 95% close. It's close enough that they would come to the same conclusions that I came to on my chart if you follow the rules. And you can see that there's the little spike in channel, channel on the way down, the break, the move to a new low, the bigger channel going up here, the smaller channels working within. And also I noticed this line here, this looked a lot like a spiking channel, and so there was somewhat of a line here to work off of. And but either way, you were still looking for the new low on this short-term channel. And one thing you got to remember is anytime you get a big news item that sends the market off like this, it almost always takes it back. Now, will we take it all back today? I don't know. But it's looking like we probably will. And that usually happens. And so, you know, I would always try to remind people when we have a big news move that always remember that even if it, you know, even on a big move like this, generally pretty quickly prices come back and erase all that move, because what happens is you get a real emotional move in the market, and then people realize, hey, you know, we overdid it, and the market starts correcting and takes it all back. And you'll see it the same thing if it spikes up, it'll usually come back or whatever. So but really good trading day. I'll say this, I had time to do, you know, because of this big move, it was fairly easy to make some money, but I had time to do my own personal trading, and then I took some practice trades in there, just kind of halfway paying attention, and when I saw a setup, I took it. And also was able to work on the website and get this email thing going, and it's still just now lunchtime, so that's how good a day it's been. And I'll show you some of the, you know, practice trades I took when I had the spare time today too. But let's just start and go through all the trades. First, I'm going to make this a little bigger, and we'll have to, and you can see the volume today. Look at all the bars. That's the great thing about this market. Just when you think it's going to be all like this and nothing's going to happen, suddenly you get something like this, and you get a great trading day. And so if you're not happy with what you're seeing, just give it a little time, because it'll usually end up coming back. But here's what I saw. Early on, we had a spike and a little channel working up. This may be more like this, but either way, you got a couple of closes outside of it right here. And it might have even been like that right there, and you had a couple of closes out, but a move to a new high. There may even be a midline in there, but I originally drew it off those first two swings there, and I actually caught that one too, and I caught it off that close. And then we got a couple of breaks here, move to a new high, and then it starts selling off. But this is where the news hit. But this was a second entry long. Notice you got a little overshoot here, and then you overshoot. First entry, pull back, second entry long, and then shoots off up to a new high. A real aggressive trader. This looks a little somewhat choppy as well, and there are some highs right across here. And you can see those highs right across there. And so, well, let me just go ahead and draw the lower side as well. And you can see that right across there. So it looks a little bit like a trading range as well. So you could have treated that as a failed breakout, plus it's a new high after trend line. There's several different reasons aggressive trader might go short there. And it is a second entry short. Notice that this swing is lower than that, so that's a new swing low. First entry short, pull back, second entry short. A lot of different reasons to want to take that trade. The smart traders are going to wait on the second entry counting off the high, since we're working down now. And notice this, how that shot right through the EMA. There's no resistance there at all. It just falls straight through and goes and makes a low lower than all these previous lows. That's a good sign that the market's reversing, pulls back. You get your second entry short right there. Off it goes, it pulls back again, a failed second entry long. Notice that new high, pull back first entry, pull back second entry, and off it's going down to the downside. This really set the trend line, these first two swings here. And you might have tried it off of this one, and originally I had one off of there, but it just didn't, I couldn't make it fit anywhere. So when I drew it off this one, then it comes back to confirm it right there. So you might have even thought about going short there. I really probably should have made that one green. Aggressive trader may, but you know, it's only one tick off the low. It's a first entry. It is kind of a breakout pullback short, so But because of that trend trend line, excuse me, you might have thought about going short there. I think it's too risky. I really didn't even want to mark it green, but I will because some aggressive traders are probably going to try to enter there because you get a real small stop if you just put your stop right above the bar. But then you pull back and touch it again here. Again, it's a little bit aggressive because it's real choppy and you've had a big move. You're way away from the EMA. But then it comes back and it makes a big turnaround, breaks higher, turns down, a real bearish bar. Just wait on either put a stop there or, by this time it's obvious this thing's selling off. This all happened pretty quickly too. So either use a limit order here or put a stop there. And I didn't think it was safe taking another trade on the way down here. Then you get your correction. Notice the break, 2 legs up to a new high. You made a double top here, and it's right at the EMA. It is a second entry. It's not a very good signal bar, and it is kind of a doji looking bar with some stem on both sides. So you really, if you took this one, you need to use a limit order so you can make sure that you get a better entry. It would have worked. It broke a little higher, but as long as you had your, if you used a limit order and you were using your 2 point. The reason I marked this one this way is because I actually took this trade, and it did go a couple of ticks higher, but if you'd had your stop only 2 ticks above, you would have got stopped out on it. But because I entered in here, and I didn't even have time to move my 2-point stop or tighten it or anything before we were really headed down again. So then you get, you should have had this line here because it was looking like a spiking channel. And I think there may be a bigger channel if you copy this and drag it over here. You can see that's right about where we turned. So there probably is a bigger channel there. But when we got a break, we never could get a retest of the low. At least we haven't yet. So, and I'm guessing we don't come back. I'm really thinking this is the channel. And some people were looking at this, but we turned down right off that. Then we had a first entry long, pulled back a second entry long. It fails, and so I like that one. Then we pulled back and tested that line again. And you might have thought about going short. Let me make this a little bigger. It's kind of hard to see below that doji, but I think you were better to wait on this bar. And when it broke below that bar, I dropped a limit order in there, and then it worked on lower. So, but you could have entered that one either way. I think it's a little risky entering on a stop, but you're looking for this new low, and guess what? As soon as you get a new low, this thing has been rallying ever since. So a lot of people saw this channel, and realized the break, the move to a new low, and then off we go to the other side. There really weren't any entries right in here. It's too choppy. I should have probably put a circle around. Let's just do it this way. Just put a circle around this stuff. I think this is too. I think you just got to sit out of that. I don't think it's worth fooling with. If you didn't enter down here, there really wasn't a good entry. There was a second entry long here, but it's so close to the high of this. I just don't think there was a good entry unless you enter down here. I think you just had to watch this. And then of course you get 2 legs back. This is a second entry long, and where is it? Right off. If you drew that line across there and drug it down, that's right where it bounced. And so first entry right there. This little bar here. And again, if you enter there, you probably want to use a limit order. And it did come back. It would have filled it right at the top. That's about it when it came back if you didn't get filled before this bar took off. But that took off pretty quickly. Most people recognize what was going on there. And then the second entry long here, same thing. When this broke higher right here, just drop a little limit order in there. But you really could use a stop there. It's a small bar. Your stop's going to be reasonable. And off it takes off. Excuse me. And then you get a failed second entry short here. Another easy long. Those are the sure things almost. I really thought we'd get to the upper side, but we couldn't. And notice we came up short there, and we overshot it about that much down here. And we do have a break of this trend line now. And there are these shorter term, but notice the break of this shorter term moved to a new high. Now you're correcting. And I haven't drawn it or anything, but there's probably maybe more like that. But I'm guessing it's probably going to be like so. We'll see. You got a break in a new low now, and we're trying to go higher. So we'll see what happens here. But you could have, originally I would have drawn it like that, but you might have ended up drawing it like this, and this may be the first break, and so you may get another pullback. Let's just see how this fits on the other side. That's possible. We'll see. I'm guessing that this is probably it. That's your break. And notice that little failed second entry short. So there was a trap right there. You might have even gone long right there. But that's what I saw today. Easy trading. Like I said, I had time to get my trading in, and then we'll just put the other trades I took while I was just watching on SIM. I took these on SIM, just watching while I was piddling with the website and answering some emails and things. And you can see the two shorts I took here, and I bought back here, and then I took another short here and bought back here, and then I took a long here and bought back here. And so 1, 2, 3 shorts and a long. So that's 4 trades. That's $400. And I think I made a couple of extra ticks on one of this. So a little over $400 today. And that was just between, and that was after the good trading was almost over. So then that was from between 9 o'clock and 10:19, so within an hour, $400 there. And, you know, you can do this. You know, you can learn to do what we're doing here, and it's, you know, you can do anybody can do this. It's not easy to learn. It's not that difficult either, but it's not easy, but it takes a lot of time and a lot of experience. And you got to learn to draw the trend lines and follow the rules like we teach them. And going back to this guy's chart, you can see his chart looks just like mine. You can see all those same setups that were on my chart right here on his chart. And, you know, I don't even remember who sent me this. Just somebody sent it to me. And I was excited to see how close it looked to my chart and how well they were seeing. I'm not sure what all these flat lines are across here. I think it's a little, you know, it's still pretty obvious and clear what they're looking at. But you know, people send me their charts, and I see this all the time, and they'll try to add stuff to it. And I just, you know, that's okay if that helps you, but I just think that clutters it up. And you know, I don't know what those lines mean, so to me, it just clutters it up. You know, so maybe they're, I don't know. Let's just see if we can see their. You can't really see the top of their chart to see the labels, so I don't know what that stuff is, unless that's some kind of Fibonacci or something, but there's no labels on it, so I don't know what it is. Doesn't really matter. It may be something they're just drawing there on their own, but you don't really need all that stuff. One other thing I wanted to show was somebody sent me, I don't really, to me, it doesn't draw the lines to my liking, but it might be helpful to some people. And if you just click, trying to remember where it was. Oh yeah, right here. If you come over here to the type of bar and you use line on close, this uses the closes, and you might try using that to draw your trend lines. If you just draw them off the first 2 swings of those closes, it gets you close. So it could help some people. I wasn't crazy about it, because see where this line is on here. Gives you the same angle, but it doesn't put it in the right spot to me. This one gives you the same. Pretty much all of them give you the same angle, but they don't put them where I like to see it. So it might be helpful to you. You can see that one worked out perfect right there. And then you just copy it and drag it up. Look how it's catching those right there. And if you drag this one to the low, it It gives you the same angle. It doesn't put it exactly where I like it to my liking, especially some of the shorter term ones. But it gets you really, like, you can see this one working up here. It's not real. Let me make this a little darker. That doesn't really get it either. So you can see it doesn't use those first two where I have it there. And but it would still get you really close. And so let's just draw one on this one right off the two closes. That puts you right there. Now let's go back to our candlesticks. And you can see my line is bouncing prices better, but yeah, and see that line, it catches those two closes there. And but on mine, you get the break to move to a new high, and here you don't get a new high. So it's not exactly perfect, but it might help some of you. So I thought it was worth sharing. And what I would do is I wouldn't use it. I'm not saying go to that kind of chart to trade, but just to draw your lines, and then just click on, it's called line on close, and find your first two swings, draw your line, and then go back to your candlesticks, and then maybe adjust it. So it might be helpful to some of you to do it that way. With time, you'll be able to draw them just like I'm drawing them. It's not that difficult. It just takes experience of knowing what to look for. But I like to use a combination of the closes. I want to see it fit properly. I want to see when it touches the lower line, it turns prices up, and when it touches the higher line, it turns prices down, or at least attempts to turn them down. And then you get your break and you move to a new high, and then guess what? It's correcting down. You get a little close outside, a move to a new low, and then it's going higher. Close outside, a move to a new high, then it's working down. You got to close outside there. If this one's right, either way, even if this one's it, you got to close outside and move to a new low, and you could have had a nice little scalp right there, and it's still trying to come lower. So we'll see what happens. But anyway, some good stuff today. I hope maybe that again, that's called the line on close right there. And it just draws a line based on the closes, so you can see the swings a little easier. I wouldn't trade off of that. I'd go back to my candlesticks, but it might help some of you that are struggling to find the first two swings off the highs or the lows. And that brings up one other thing yesterday. Somebody wrote me a message and says, do your first two swings of your trend always start off the overnight? It doesn't matter where it's at. Yes, I use the overnight data. So if the first two swings are during the overnight here, I'm using those. But like here, the first two swings, this is after the market. Well, this is before the market opened, so that's in the overnight as well. It doesn't matter you just got to try to find the first two swings of the high and the first two swings of the low. And a lot of times it's the first few closes or first few bars. And there's a bigger picture. There's your first two swings right there. And that gave you this bigger trend line. But that came after the market was already going. This one was prior, because this started at 7:30 or so up here, and here was the open. So that's the first two swings that used the overnight and the open. So you don't care when the price action is forming. You're just looking for the first two swings of the high and the first two swings of the low. So make sure that's clear to you, because I was a little surprised that they were confused about that. I think they were trying to wait till the market opened and then find the first two swings or something, or maybe only using the first two swings of the overnight, and then they were not looking at the other stuff. So if you're confused on that, hopefully that makes it a little more clear. Phone's going to start ringing here. One other thing of note. My mind kind of went blank there. I had one other thing I was going to tell you, and I was going to wrap this up. Oh, I know what it was. I've got a trader that's been emailing me for quite a long time, and he's always claiming he knows all the rules, he understands everything, but he still struggles. But he sends me an email today, and I'll just show you where He went short yesterday. He went short, I believe it was right here. And he thought what he was looking at was there's a failed second entry long there, but we're on the way down here. So what you're looking for are second entry shorts. There's some other reasons why this was not a good trade because you already had the break of the trend line right here and two legs to a new low. But forgetting all that, what he was doing is he didn't realize this was a first entry short going short right here. He went short right there. So that's breaking a lot of rules. First of all, that's a first entry short in a downtrend. Second of all, he's going short just a couple of ticks before the low. He actually went short like one tick below the low. So his chart was a little different than mine evidently. But anyway, you don't want to be going short right there. And for a million different reasons. But the previous day, he had gone long at the very high of the day with only one tick. I think it was right here. He made that new high, it pulled back, and it went. So, and I tried to explain to him, you got to wait on a second entry. And if you did, look what happened. And so today, the market's coming down, and he was counting from here, first entry, and that's not even a first entry count from there. So maybe, or actually, he must have counted from here. Pulls back first entry, pulls back second entry. So he saw that, and then he thought, well, I can go short now because the market tried to go higher twice. No. On the way down, you're doing just the opposite as you are on the way up. You're counting off the lows. Sure, you do look for traps, but you're only looking for long traps up here at the high. You're not looking for a long trap way down here unless there's some other things going on. And so he didn't understand that this was a first entry short. And you got a second entry short here, but you didn't want to take it because you've already, if you remember the lesson from yesterday, here's your trend line working down, and you got your break there and two legs to a new low. And so now you're looking for a reversal. So you need to be drawing your trend line up through there. There's no reason to be going short right there. All that is a short trap. Instead of, he was looking at it as a long trap. But there are not many longs are going to get fooled down here most likely. So make sure you understand that when you're mostly looking for second entry shorts in a downtrend, counting off the lows, and you're mostly only looking for second entry longs, counting off the highs in an uptrend. And this is, even though this is a downtrend day, this is considered an uptrend because it's a correction. So just keep that in mind. I hope that makes sense too. So, but I'm going to wrap this up, and we'll be back to do it tomorrow. I'm actually going to, one other thing, I'm going to upgrade my computer today. My computer works great. It's still got plenty of speed. I don't have any problems with it, but I can't upgrade it to Windows 7. So I want to upgrade. XP's not being, for security reasons, you can't update it anymore. Microsoft's not updating it any longer. And so I'm going to update mine. And so I don't know how. It should be all done this afternoon. I should be back first thing tomorrow. But should we have some issues and me getting everything reloaded, because I'm going to have to reload everything from scratch. It's a possibility that maybe no lesson tomorrow. So if we don't have one, you'll understand why, because it had something to do with my upgrade. But my guy's usually in and out of here in an hour or two. So the only issue is just going to be transferring, getting all the new software installed on the new computer, because you can't just copy your drive and switch it over, because I'm changing my, I'm going from XP to Windows 8 or something. I can't remember which version, but whatever. So anyway, just be aware of that, just in case there's no lesson tomorrow. You'll know why. And otherwise, if I don't, if there isn't a lesson tomorrow, hope everybody has a great weekend. Hope you had a good trading day today, and we'll be back to do it Monday at the very worst. So this is Matt with PriceActionTradingSystem.com, and we'll see you next time.